Video, and in today's video I want to give you guys an update on the Nasdaq, the S&P 500, the Dow Jones, as well as gold and the dollar index. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please leave a thumbs up as it really helps the YouTube channel as well. Now, the most important thing that you have to keep in mind is that before or in the week of high impact data, the markets tend to move sideways. And the reason why the market moves sideways, because investors normally wait for data to be released first before they start betting or investing their money on whether they want to continuing buying or selling a stock or a index, which is the dollar or the Dow Jones or the Nasdaq. So as you can see here, we've got the CPI data. The CPI is the Consumer Spending Index, which basically tells us whether or not the consumers are spending a lot of money, which tend to lead to higher inflation numbers. So we know that the US inflation is currently sitting at 9.1, which is the highest that it's been for the lateral part of a couple of months. And the thing about this is that when there's high impact news coming out in the week, it's always good to be reactive and not predictive. Being reactive and not predictive, it basically means that you don't trade the market, or so you basically don't trade the market until the data is released. Saying that the market's going to fall without having the sufficient data to back up what you're saying is not the way that you want to go. It's better to say that the market needs to fall, and looking for sells on the Nasdaq in a bullish market is not the best thing to do at the moment, unless we get that data being released. Now, I'm going to show you guys how you can prepare yourself for the data that's being released tomorrow. Basically means that we are going to analyze the market today, so that whatever happens tomorrow, you can use the information today and trade it tomorrow in the markets there as well. Now, first things first, okay, if the CPI data, so then we know the market moves sideways. If the CPI data comes out lower, that means that the inflation is dropping and consumer spendings are also easing and it's cooling down, meaning that the Federal Reserve is less likely to hike interest rates by 0.75, and they could potentially hike it by a 0.50 basis point first. If inflation comes through higher, we can then expect the market to continue. We can then expect inflation. If inflation goes higher, if the inflation numbers comes through higher, then that basically means that we can expect to look for selling opportunities on the Dow Jones or the stock market. So I'll give you guys two probability setups that you can look at trading the market in the event, regardless of which way the data comes out, so that you can know when the data is released tomorrow as well, and then you can make a trading decision based off that. Remember, if the data is lower than expected, it just means that that we can expect the bullish momentum on the Nasdaq to continue. If it's higher, then that means inflation's higher and you can expect the stock market to continue lower. That's all you need to wait for to see tomorrow. So this is going to be two probability setups that you guys can look for. Now, I'm just going to go straight to the daily time frame, because otherwise this video is going to take a long time for me to make. Remember, the Nasdaq is still in bullish territory, so it would be stupid of us to look for selling opportunities. Now, a simple price action trader would come and say, yeah, but I want to sell there. And that's all to understand. But sometimes you can't just sell the market at a high level without getting proper confirmation. And the reason why you do not want to sell the Nasdaq at this level, it's because the market is still trading above a level of resistance. Now, when the resistance gets broken, it becomes support. So we're going to use that as an indicator. Now, if we get this massive impulse, you get correction. You can see we first had the market pull back to the 0.50, then to the 0.382 yesterday, and again we need to monitor the price action from here. Now, this is how we're going to approach the situation based off where we are now, because I can tell you that the market will probably consolidate between today and tomorrow. And if we go on to let's say we go on to the 2-hour time frame, you can see there the market will probably start this consolidation phase between today, for the lateral part of today there as well. Now, this is how we're going to approach the situation. If the inflation data comes out higher than expected, then what we are going to do is we're going to wait for a break below this level. Then on the retest, we will then start looking for for selling opportunities in the market. Why? Because doing this, we will then be trading in bearish territory, meaning that we will be trading below bullish bearish structure. And this is the best time to get into the market, because this level over here acted as a level of resistance. It got broken, became support. Support did not hold. All of that support would then be turned resistance. In doing so, the market would then also print a head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Next up, what do we have? Now, next up, we are going to take a look at the Dow Jones. Now, firstly, it's important to keep in mind, right? And like I said, I want to give you guys two probability setups, right? If the, sorry about that, and I'm going to go deeper because the market will normally give us a liquidity spike there as well. So this is if the inflation numbers comes out higher. If the numbers comes out lower than expected, then you can expect the Nasdaq's bullish momentum to continue. Then you have every right to say that you are bullish on the Nasdaq, because now you have actual factual information to say or to make that statement. Next up, we've got the Dow Jones. Now you can see the Dow Jones, it's already started the trade in moving sideways. The Dow Jones is responsible for measuring these numbers for high impact data. You can see the Dow Jones came into a consolidation phase on the 2nd of August, and it has been consolidating for the entire time. Now the Dow Jones could potentially today, also just drop lower, potentially drop lower as well. But it's very important that we are reactive and not predictive. But like I said, because we are consolidating, the Dow Jones could potentially make another wave to the downside. So if you are a scalper, you're more than happy to jump into that market there as well. Next up, we do have gold. Now gold, you can see over here again, so we are going to apply the same principle because it's a stock that we have here. We're going to apply it here as well. Next up, we do have gold. Now gold is the same situation. So we know when CPI numbers are high, then you always expect the dollar index to increase in value. If the CPI numbers are low, you normally expect the dollar index to decrease in value. Now we could potentially see gold clear this line of liquidity over here to go and test that previous level of support that's now turned resistance. But you can see gold seems like it also started this consolidation. Again, gold could also just turn around and go and hit that level here at the bottom once again. Now, if the CPI numbers comes out lower than expected, then you can expect gold to continue higher. If the CPI numbers comes out higher than expected, then you can expect gold to continue lower, and I'll probably say up until there in as well. So we're going to look for buys if the CPI numbers comes out low, and we're going to look for sells if the CPI numbers comes out high. Next up we do have the S&P 500, and you can see how the markets has been moving sideways. Now any price action trader will tell you to sell there, buy there, and I mean that's stuff that you can get for free off YouTube. Again, we're going to use the same principle here. We could potentially see this market also just go to the bottom between for today, and sorry about that, for today there as well, and then probably tomorrow we could see then which way the market's gonna go. Again, if the CPI numbers comes out lower, then we can expect that break and that retest and then that continuation to the upside. If the CPI numbers comes out lower, then we are going to wait for the market to break below that. Then on the retest, start looking for some for some selling opportunities. But going this way would give us certainty that we are trading the market in the right direction, as opposed to being predictive and say that this is where the market is supposed to go and this is where we want to go. Although the CPI numbers could potentially be lower because the prices of oil came down, which is also a good sign. Next up, we've got the dollar index. Now the dollar index, as you can see over here, has also just started this move over here. Now if you have There we go. So this is basically what we can expect from the dollar index there as well. So again, then from there, depending on if the data is high, then you can expect the dollar index to break and go higher. If the data is low, then you can expect the dollar index to break below this level, then on the retest continue lower there as well. So about that, to break below this level, then on the retest continue lower. In doing so, the market would then print this information, which is considered a bearish pattern from a technical perspective there as well. Now, that is how we're going to trade the US CPI data that's coming out tomorrow. But for today, I would say, scalpers, you're more than happy to go and enjoy this wave down and maybe here as well. But just be very careful while doing that as well. Thank you for your time. And as always, cheers for years.